Alrighty, so it is 7. I will be waiting for Peter to get back on, but before we start, I wanted to quick disclaimer, this session will be recorded for some of the members or people that will not be able to attend this event. So just be mindful that at the end of this, if you do come up on stage to talk or ask questions, that it will be recorded. So just be mindful of what you say.
Yes, and I didn't go anywhere. I'm still here.
Okay, I guess we can get started now
hi
since it's 7 o'clock. Well, hi all, welcome to our stage event. Today we have here Jigsaw Trading CEO Peter, and I'll let you give a quick little introduction of yourself.
Hi all. So some of you will know me and some of you don't. My name is Peter Davis. I own a company called Jigsaw Trading, and mostly focus on order flow. And mostly futures, but we got some stock traders, and we've been going about 11 or 12 years now. And what we try and do, and what we've always tried to do, is stick to, there's a lot of software platforms out there or trading platforms out there. We're really not trying to do that. What we're trying to do is create functionality that suits certain trading styles and stick to that. So we're kind of a niche player in the platform industry. We don't try and have a platform for everybody. It's really a platform that I built for myself, and that people can use that. So that's who we are, and you'll get it a bit more as we go through the questions, I think. So yeah, thank you for coming, and hi.
Yeah, we'll definitely get. I want to definitely also learn a little bit more about how you use the Orderflow tool, but let's get to know a little bit about you first. I know you also trade, so what got you into trading in the first place?
I've been an expat for a long time. So I come from England. I come from a part of England called it's not far from a place called Birmingham, which is a really terrible place. It's a really depressing place. So I left England in the late 90s and worked around. I was in America, Netherlands, Denmark, Japan, and then ended up in Thailand. And I was self-employed as well. So I earned quite a lot of money in that time, but I had no clue about finance. Like, I didn't know what to do with it. I knew leaving it in the bank wasn't a good idea. But I knew nothing. And I didn't know that independent financial advisors weren't really that. And so I got a financial advisor, or they found me. And within 12 months, I'd managed to knock off 30% of my net worth. And I couldn't believe it, but I didn't know how to fix it, right? But I knew that if I let these guys do it, it would be more expensive. I could actually, the way I saw it, I'd actually be better off losing the money myself, because then at least I'm not paying the fees. So I do remember when I lost the 30%, I remember sitting in this office with the financial advisor. And he said, we'll get the 30% back. We figured out how to do it. And I'm saying, okay, how's that? He said, what we're going to do, we're going to leverage the rest. And if we leverage the rest, all we got to do with the leverage is make 10% return, and you're back to where you started. And I said, well, how are you going to make a 10% return? And he said, well, anybody can make a 10% return. And I'm like, so why did you just lose 30? And he didn't have an answer to that. But even though I wasn't a financial person, I knew borrowing money to win it back was a terrible idea. So basically, I'm like, I just need you to learn it. I know I need you to learn it. The financial advisors where I was were complete sharks, and so I thought I'm going to learn this myself. And if I don't do very well, I'm still ahead of the game. So that's what happened.
Wow, it's really humbling to, humble beginnings, right? So how did you learn? What kind of information did you look for? Would you say you're successful right now with trading at this point in your life?
Yeah. Well, yeah. Here's the way I see trading. It's a bit like pole vault, right? And the way pole vault is, if you want to start doing pole vault, you're not going to have any idea. You're going to have an image in your head of what it's like, right? And I don't do pole vault, by the way, but I don't know what it feels like. So what I did when I got into trading is I knew I didn't know what it was. And so I started the way everybody else does, which is online. And I could see, there's certain things everybody was raving about. And so what I did, there was one book at the time, which I won't name, but it was a book with 8 or 9 strategies in it, and everybody raved about it. And so what I did, I coded and tested those strategies, and they all failed, all of them. And yet everybody's saying this is great, this is great. And these weren't discretionary strategies; they were like mechanical strategies. And I went back to the forum I was on, and I explained what I'd done. And it was like I told them everybody's wife was ugly. It was unbelievable. And like when that happened, I thought, you know what? I don't buy this. This seems to me more like that 30% I lost. So the cynicism that I'd given me, I just basically, it helped a lot because I didn't believe anybody. So what I did, I was actually running a company for a Japanese multinational at the time, Fujitsu. And I was running an office in Thailand and Singapore. And so what I did, I went to Singapore, and in Singapore, our office was in the financial district, and I just bugged traders. So I would go to networking events, and there's a lot of traders there, and I just bugged them. I'd just say, what do you do? And it was a surprise to me because I don't know if you've ever been anybody's been at a party, and you've talked about trading because you think it's interesting, and like nobody else does.
Yeah. That's basically everybody here. It's like we don't have any friends in real life that trade, but like us.
Exactly. If you mention trading at a party, that person's going to find an excuse to leave. And but you meet real traders in a bar at a networking event, you can't shut them up. It's like, I thought it was all secrets. So basically, I met loads of traders. Lots of them were doing stuff I couldn't possibly do. So one of them was he was in Thailand, and he was running an open outcry squawk where he was dealing with 12 banks, and he was kind of basically market making the Thai baht US dollar. And, they could put $1 billion through a day. And it's like, I couldn't do that, not because I don't have the skills, but because I don't have the infrastructure and the amount of money they need to do that. So I could see there's like ways to trade, and there's ways to trade that you can take home. And it was just, that's what led me to this particular set of techniques. And that's really how I got started.
So I understand that you did kind of settle on day trading, right? After kind of like looking for better ways to invest long term, but you settle on day trading.
Yeah. So, it's, like I say, it's like pole vault, right? You've got an idea where it's going to be, but you don't know till you try. So when I started, I wanted to be an investor, and I took some long-term courses, but I just found that when you invest, stuff happens that you don't expect that really can knock you around. That wasn't your fault, and just you hold on to a trade. The longer you hold on to it, the more likely something's going to happen. So I did long-term trade. It was the first thing I did. I found it very boring, but I also had a bit of a hard time sleeping. I still do some long-term. I like, if you know what product recall is, you know what product recall is, right?
No, I do not.
So for instance, if a good one I had was Harley Davidson had a brake problem. And so when something like that happens,
product recall, like we recalled all the products because there was an issue.
Yeah. So when there's a product recall, the stocks tend to go down quite a lot, and it's an overreaction. So as long as there's good, as long as we've got good cash flow, and they're not trying to monkey around with the numbers, I would get into that because I felt it was a discount. And so what I was using there was I was using the skills I know in terms of reading financial reports for running the companies, and just a bit of common sense, that there's no reaction. And I was comfortable with that.
Traumatic reactions, right?
Yeah. So I was comfortable with that because I felt I was getting a good price. But overall, I just felt a lot more comfortable with not holding on to stuff very long. And that's why I went into day trading. I didn't know that about myself at the time, but it was what it was. I don't know why, but I guess it's not important.
Yeah, I guess it's really just personal preference and like personality. I'm kind of the same way. I don't really have patience. So I definitely have a long-term port, but I just prefer day trading. It's more fun.
It is more fun, but
it's a little bit fun.
So, yeah, I think the trading style has to find you. But I like day trading. You've got a finite set of information. You get hit by stuff occasionally, but right. When Angela Merkel said something once that I couldn't believe how much I slipped on a trade. It was like 23 ticks on a bun trade. But apart from that, those things are so rare when you're in and out very in short term. So and it's like I say, it's personality,
Mm-hmm. Yeah, for sure. Well, let's talk about Jigsaw and like
Yeah.
why such a heavy emphasis on order flow. What's the significance of using order flow to help the day trade?
It was the traders I met. That was it. There was no. I the thing is, I didn't know. I think didn't know any different, right? So, if you one of the tough things in this industry I saw from the start is you're bombarded with techniques, right? And there's so much to do. And when I heard about Orderflow, it made sense, right? It made a lot of sense that you're watching the orders, and that's kind of giving you like if you're using charts to define where to get in, that's your cake. And then the order flow is the icing. It's like kind of the extra little bit on top. And so that's is having that extra bit on top was part of it. Seeing the guys in the prop world doing it that I met at the networking events, that just said, okay, that's real. So if it doesn't work, it's probably me, and I should look at that for a while. But it was just the comfort zone, and it's probably related to the fact I didn't like swing trading. I felt it was just like it's just like everybody wants to be sure, right? And it just felt like that extra bit of certainty. So, that was the main thing. I felt it gave me a bit of certainty, and I knew people using it in the professional world.
So would you say order flow kind of, because you can actually see the trades, buys and sells coming in and out on the tapes, it gave you more confidence in addition to like, basic TA and all that?
Yeah, I mean, like I feel now that I can, if I get into a trade, I can really tell if it's working or not. I can tell more easy if it's working. So, for instance, if the market moves against me, like if you get a trade on the ES, on the S&P 500 futures rather, and if it moves against you a few ticks, but there's really not much trading, it's just like flailing around, I'll stay in the trade. But if it moves against me and there's thousands and thousands of contracts in that move, I feel there's actually some real people trading into that and some aggression, and I'll get out. So it's that kind of thing, being able to not get into a trade if there's a lot of, if you want to go long, don't do it if there's a lot of selling. Just wait and get in at a lower price. So it's that stuff that I use it for. Some people will use only order flow to trade. I like to look left. If it's 11 o'clock in the morning and you're in the market swung up and swung down, and now you're right in the middle of that range, and it's kind of narrowing out, then that's a good tip that you're probably not going to get a move, right? Because the market's in the middle of where the day is. So I like to know where we've been on the day, and then I like to use the order flow to get into the market, and it just kind of suits. I guess it suits my personality.
Okay, I have one more question for you. So I know you also trade futures. There's actually not a lot of future traders in our Discord. Can you kind of explain why you moved from stocks to future, your decision, why you did that, and if it's better or worse? I'd like to hear your
Okay, so so when you trade, a lot of people get into trading, and they look for chart patterns, and which is fine, because all trading is really about patterns. It's about finding stuff that happened before that helps you figure out what's going to happen again. And to me, trading is about cause and effect. So there's a cause for a move, and that cause might play out and have a fairly predictable effect rather. Now with stocks, like we were chatting earlier, when I was doing the stocks, day trading stocks, I would spend a lot of time finding what was in play. Then the market would open, half of that would just be moved already. But I'd look at earnings announcements, upgrades, downgrades, news, all the usual stuff. And it was a lot of work, but I knew other people that were doing it, and I knew there were services like briefing.com that could help me do it. And then I met a guy who was trading a $30 million account, doing the same thing. And he had four full-time researchers. But in addition to what I was doing, they knew for each company, because of the researchers, like for earnings, what that company had done on every earnings for the past 3 or 4 years, whether that company generally underreported, and what kind of reaction they got from the market if they beat or missed. And I'm like, wow, that's smart. That's really good. And I knew I couldn't do all that, right? And then futures, you don't have all that. So with futures, there's a very limited amount of them. And they move based on macroeconomic events, right? S&P 500 is an index. It doesn't move, generally, it doesn't move because one company does something. So for me, stocks, playing stocks and selecting an individual, a set of stocks to trade each day was a lot of work. And there was a lot of different things that could impact a stock, right? Like individual products. With futures, it's all big picture stuff. So, oil got hit when one of the Saudi refineries got bombed a while back. That's a macroeconomic event, right?
Mhm.
So there's less macroeconomic events. You can pick a set of instruments and run with them. They won't all be, active every day, but generally speaking, you know what's going to hit the market. It's all macroeconomic stuff. You can't miss the macro stuff really in the news. I just felt fewer markets, they're always in play, or pretty much always in play. And the stuff that moves them is there's less stuff that moves them. And that's where you get to back to this chart thing where people tend to think that it's just the charts that move the market, but there's all kinds of things, all kinds of events that can move a market. And so charts, news, all kinds of stuff. And like futures, I just think there's less of it. And so it's more manageable for someone like me.
Okay, and for those of you, for the people who are listening who aren't really familiar what the futures market are, can you kind of, in the simplest way, break down what futures are, what time you can trade it from, and like
Yeah, sure.
what's the price for contract? We can go with those.
Okay, so the theory of futures is that they exist to stabilize prices. I don't think that's true. But basically, if you're Kellogg's and you make cornflakes, you want to lock in the price of corn. You want to know what corn's going to cost you so you can do your budgets and stuff. So you buy corn futures. And at the date, and the futures contracts have expiry dates. So at the expiry date, you're going to get the corn. Now, the farmer also wants to lock in a price, right? Of what he's going to get to sell it. So he sells futures contracts. And that's the reason that futures exist. So there are futures for agricultural products, futures for energy products like oil, metals. There's futures for index futures. So it's like bigger picture markets. The theory is those markets exist to stabilize prices. I don't think it does. I think it's for the speculators to take it over. But you're trading commodities and stuff like that, basically.
Right, thank you. I guess next up we have the advice you give to new traders or a mistake that you've made in the past that you would like to pass on as a lesson to some of the listeners.
Yeah, I think there's a couple of things. I think the key thing is you don't try to bend trading to your will, right? It doesn't matter what you want trading to be. It is what it is, right? So really that's the first thing. Second thing, don't bring your professional skills to trading, right? If you're a pilot, don't set up a cockpit, right? If you're an engineer, don't try and use your engineering skills. A lot of people, they come to the markets and they say, I'll use my coding skills for this. And I see that as a mistake because trading is a skill in its own right. And if you try and make it like your skills, again, I get the point, but it's not gonna bend. The other thing that as well is on first attempt, you won't be able to tell the difference between a scam system and the best system in the world, right? So if you buy something that's a total scam, doesn't work, they're just ripping you off, and then you buy something that's fantastic, you'll get the same results initially. So when you start with something that works, it won't work for you, right? It's every kind of different technique is a skill, and you're just going to have to bite the bullet. So the conundrum for the trader is, if that's the case, and it is the case, how do you, if you're going to get the same results first time, how do you stick with something that's legit? How do you know it's legit? And that's a real problem in our industry, right? That there's too many people selling stuff that doesn't work, and they sound way better, like 99% win rates. And you're trying to avoid that, but then when you get something else, it's a really tough thing to get confidence in a technique. And so, that's why we kind of lean on educators from the professional world. But Yeah, it's a conundrum. I don't. No, you've got to understand that happens. Anything good will not work the first time. You've got to have some way to validate stuff. Or either somebody else that uses it profitably, because it's very tough. It's very tough when you're sitting there 10 losers in a row because you're just not very good at it yet. Your natural reaction is going to be, oh, this is just like that other stuff. It's just crap. And some people spend 20 years, right, going through system after system after system and just not getting success with anything because they throw things away too early. And there isn't anything that can tell you something works until it works for you. And then the other one, which probably doesn't apply to this group, one of the biggest problem is everybody wants to try and buy the low of the day and sell the high of the day. So people are selling levels and all this stuff to say, okay, the low of the day will be this tomorrow, and then you try and buy it. So you're always buying a market that's going down or selling a market that's going up. So that is almost guaranteed to fail. Nobody can pick the low of the day. Nobody can say, oh, this is where the low of the day is going to be in advance. I've never met anybody. Maybe somebody can have met them. But, if you watch a market, if you watch Orderflow and you watch a market in a move up, you can see massive amounts of money being traded on the way up, like really big buy orders. It's not individual money, right? So I've heard the best way I heard it described, the silliest way I heard it described, was that the low of the day or those reversal points were wholesale prices. So then the professionals buy wholesale prices, right? So the people that buy the low of the day, they're the good guys, they're the professionals, and anybody else is just an amateur. And that is the most ridiculous thing, because if the professionals, the size only bought at the bottom, it wouldn't go up. We need the big guys to be buying all the way up. It's going up because they're doing that. So what we try and help people with or advise at Jigsaw is like, if it's going up, that's when you buy it. When it's going down, that's when you sell it. And you have a lot more success with that than every time you're buying when it's moving down to your price, because most of the time it's just going to move, just going to go through you. And I know a lot of people don't believe this and are married to the idea that you can buy the lows, but it's way easier to get into a market based on it just carrying on doing what it's doing than to get into the market and expect it to completely change afterwards. And I think that's another big one. And it's a big seller, right? It's a very big seller for the unscrupulous people to say, we've got this great way, this secret way of calculating levels to get you the low of the day. And that's what you have to compete with in this industry. People making really big promises, embedding those ideas in people's heads until they become beliefs. And they lose money, but they still got that kind of belief that's they don't have they lose money, but they still believe the goal is to find a way to define the low of the day, right? They don't think that maybe that's just not a good idea, right? So there's so they come in that idea that I just need to find a way to buy the low, and they try and find that, and they think, oh, this one's a scam, that one's a scam, but it's the goal that's not right. So that's my belief anyway.
So you would say that you're probably like a momentum scalper. Like, how long are your time frames of each trade, of going in and out of a trade, and how do you like size in and size out accordingly?
Yeah, I wouldn't call myself a scalper.
Okay.
But basically what I like to do, I've got a fairly good eye for when a market is reversed. So if you look at the S&P 500, right, what it will usually do if it's reversing is like every swing down as the market moves down, the swings down are usually bigger than the swings up, right? The pullbacks are smaller than the moves, right? I think we all know that. But the volume in the with trend moves is also bigger than the pullbacks, right? So what I look out for is I will go with the way the market is moving, right? And I look for a few things on the order flow. I'll be watching the volume profile. So I'm watching on the volume profile for the market will move, and then it will put in a tiny little range, and then it will move, and then it will spin around for a bit. So that's one of the things I look for. And as long as those kind of little ranges are holding, I'll keep going in that direction. If I've got chart up, what I want to look for is a big swing against the trend. Once we get a big swing against the trend with more volume, and it's usually a lot of volume on that first swing. So we get that big swing against trend, a lot of volume, a big move on the cumulative delta. Then it's like, okay, at least I'm not going to go in that direction anymore, and I'm going to start stalking longs. And then what I'll try and do is I'll just be focused on the order flow, waiting for a place to buy, and then I want it to run, right? And it just depending on the volatility. If it's a low volatility day, it's all in. If it's a bit higher, then I'll scale in, right? And I could probably do a much better job at scaling in if I was a mathematician. But yeah, I usually get in like a big chunk at the start, and I'll just add little bits as the market goes. My goal basically is I'm trying to add onto the position, but I'm trying not to get, I'm trying to leave the average price, right? I don't want to bring my average entry price with me as I scale in. I'm trying to get away from it, and that's why I say a mathematician would probably do a better job of it than me. Yeah, I want to get bigger size, but I don't want the average price following me. So that's roughly what I do.
Got it. And would you say you trade every day? And when you trade every day, do you have like a targeting price? Like, oh, I'm going to make this much money and then I'm done? Or do you do?
No, I don't trade every day now. Business took over, to be honest.
Right. Okay.
Yeah.
What about before when you were trading every day? What was your kind of like philosophy of how you trade?
Yeah, I'm trying to get back into it. We're doing a lot harder to get back into it. But basically, you can't have you can have a daily target, but it will kill you, right? So you can say on average you can make so much money, but the market's about causing it. Whether you believe it or not, right? There's lots of different things that cause moving the markets. It's not just the charts. News is a very big part, right? And so there's different news on different days, and there's different opportunity on different days. So when you go to the market on any given day, one of the key things you've got to do is figure out, okay, what kind of activity we're seeing. Is this like a high volume, high velocity market? Have we had, has there been, when we had Brexit, has there been like a big Brexit announcement? The market's going crazy. So you've got to kind of understand the state of the market, because the state of the market, like if it's a summertime market and you've got a futures market that's barely moving, that's a particular market state. You've got other markets. Another market state that I use is, like a day trader day, where you've got the index futures just swinging up and down nicely, but not really ending up anywhere different. And then you've got days where it's just running one way. Now you play those days differently, but those days also give you different opportunities. So if you said to yourself, I need to get $1,000 today, and it's a low opportunity day, you're going to have some initial losses, right? And when you get those initial losses on a fairly slow day, what you need to do is stop, right? But if you keep going on because you want to recoup the losses, it's still a low opportunity day, and you're just going to make it worse. So there's this thing in trading where you feel like a king some days. You feel like or a queen, sorry. You just feel amazing some days. Like everything you do goes right. And then and it goes on for 3 and you can't understand, I got it so right the past few days. What happened? I thought I got it. And the thing is, the only thing that happened is the market changed. It's just a different kind of day, and you didn't see it. So definitely you can have like an average amount to make each day, but like if a day is a bit crap, you've got to stop. It's impossible to make the same amount each day. If you're making the same amount each day, you're leaving way too much on the table.
I see what you mean. So you're saying more like if there's an opportunity, go for it. But if it's a bad day, then just sign off and do something else.
Absolutely,
right?
Absolutely. And what you can do with the day types, people struggle with it, right? And one of the reasons people struggle is there's this perception for a lot of traders that they need somebody else's setups, and they need somebody else's stuff. And I get it. But people that can create their own trade setups, they are not genius, right? They are just normal people. Everybody can do it. So there's a book called Mind Over Markets by Jim Dalton. And it's a book on market profile, right? And it's not important what that is if you don't know. But in that theory, they've got a number of open types and a number of day types. And there's a description for those. But for most people, they're like, when they look at when the market does open, they're trying to figure out which one of those is. Would the author have done this or would the author have done that? You know, and it's like, you know, using somebody else's descriptions and you keep second guessing. Did I get that right or not? And so you have to eventually get to the point, like I do with day types, I just name them, right? I just pick the ones I could recognize or types of acting, and I name them. And people come to me and I say, you know, you need to know the state of the market. He said, what states are there? And I said, what states can you see? I said, just start with 2, fast and slow, right? Is it fast right now and slow? And then build from there, right? And then you'll never be second guessing your call on what type of market state was, because they're the market states you can see. And if it's doing something you're not sure about and you don't know the market state, don't worry about it. Don't trade it. So, you know, you can look at what other people do, and you should, but you need to take ownership of it and make it your own. Right. So if this market state thing seems all a bit weird, just have a fast and slow and just observe it, be mindful of it. And you will see over time that, you know, you can adjust for that stuff. Right. It is really important. But like, if you're just relying on somebody else to give you all the rules, you're going to fail. Right. Because you have to make those rules your own. Right. Because you second guess, you do all this stuff. And you know what? If you can't see some of that stuff that person can see, right? Or your interpretation of their words about what they see is wrong. It's very, very difficult. So, you know, making trading your own, take a baseline from somebody else, and build from there, right? You got to make it your own, right? It can't be cookie cutter copying somebody else, because the successful traders, a lot of the successful traders that I know, they're all discretionary traders. So they're all kind of, they still have rules, but they're trading what they see going on and what they think's happening, right? And that's their interpretation based on their experience. And no, people can't teach experience, right? So, you know, you're not going to find cookie cutter rules. You need a baseline, and then you need to get experience. That's the path for the traders that I know.
Absolutely. Yeah, I completely agree with that. Even within our own server, we have, you know, a lot of experienced people offering a lot of knowledge. But we always also preach the same thing, like never shadow trade. Definitely always, you know, eventually we hope that you're independent. You can make your own independent decision.
Yeah.
Based on all the information given.
And it's just a bit scary for people, I think.
Yeah, definitely. We are 30 minutes over the hour. I'm going to open the floor up for, I'm sure a lot of people have questions, whether it's for Peter's experience or questions about Jigsaw, the Orderflow tool. So please either type in the chat and I will read it out, or you can raise your hand and I'll have you come up stage and ask for yourself. And just a word of warning, please no trolling. And if you troll, I'm going to remove you. So, okay. Because it's a public event.
Send them to me. Don't worry about it. Do I see the questions, or do you want to read them out, or I'm not sure where they are?
So these people actually come up on stage and talk.
Great.
So, hello, Void.
Oh, well done. Very brave.
Hi. Can I get a hi?
Okay. This happened before too, because this is a public event. We get a lot of kids.
Yeah, it's fine, man. It's fine. You know.
Let's see if anybody has. Okay, here we go. Is there something that a novice trader could benefit from, or would this be applied to those who are more experienced?
That's a good question. So our customer base is mostly people that have been ripped off a lot, right? And so they've been ripped off a lot, and they grudgingly agree to try something that looks actually a little bit more difficult. So I don't know if you'd call them experienced traders, right? Because they haven't got anywhere with trading. So it is for the novice. It is for people who aren't making any money yet, right? It seems what we try and do with people, we try and kind of bring them in gently and get them working on it before they realize they're working. I think the key is you've got to understand the basics of the market, what orders are, stuff like that, and everything else like the bids and offers. We'll teach you the terminology, but people don't come to us if they're profitable, right? And if you've been doing trading 5 years and you're not profitable, I don't know what that makes you. I mean, it makes you experienced, but it's not a good experience. But so I think they're still novices, right? But generally speaking, for us, we target on people who've seen stuff that doesn't work, and that kind of we can engage them easier. A lot of people that are novices, they come to us, and they're like, by the time they find us, they've already put their email address into 50 websites. So we're like, yeah, come to us. We'll show you to do it. It's going to take a little while to do it. It's going to be, it's a skill you've got to develop. Everybody else is saying, come to us, buy our service. Tomorrow you'll be making $1 million a week and you'll be profitable 99% of the time. And so that's really why we don't get many novices, is because they haven't bought enough of those yet, right? So if that makes sense anyway.
Yeah, definitely. We have chicken nuggets on stage. Hello.
Love it.
Hey, Peter. Thanks for doing this. Hey, question. I mean, I've been looking at the products for Jigsaw for quite a while. I mean, kind of just lurking. I mean, I've been trading mostly futures like on TOS and using that different market and just drawing my levels and looking for my own reversals. I'm curious to see. I mean, the more I dug into it, the more I see there's like a lot more features that kind of reveal a little more about the overall market. And I'm kind of wondering, what are those? I mean, for the DOM and just overall Jigsaw product in general.
Okay, so the thing about order flow, right? Order flow is not that much different from charts, right? So order flow is a set of information, right? But it looks a bit scary. So if you look at the DOM, there's numbers all over it, but you're not reading the numbers. You're kind of you're just looking at like the overall movement of the market. So order flow is just information. We've got a lot of different tools in the product that use that information in slightly different ways. We don't tell anybody to use all of them. We just tell them to use the ones that resonate with them. When you first start, what we do when people first start, we push them towards a set of drills. And the idea behind those set of drills is for people to go, oh, I see it. And for a lot of people, it's the first time they've ever seen something occur in the market, a few times and have a predictable, a semi-predictable result. So what we do is we say, look, we give them like 45 minutes of theory, and they say, right, stop now, no more theory. Don't do the whole course. Just go into the DOM and look for these things. And if you don't get your aha moment, get your money back. And because it's not for everybody, or call us. So there's some things you can do focusing on a narrow range of things in the order flow that will convince you quickly within a week or so. It'll convince you it's for you, or it'll have you email and get us for your money back. And so that's the way we do it. It's you just need that aha moment. Once you've seen it, you'll be sold.
I see. And then, so is this? Can you execute orders through that, or I mean, could I use my standard and use that as a tool, and then use just my standard execution brokerage? Yeah,
but we'll take your fingers off if you do. The thing about order flow, right, is so you cannot enter orders, but the worst thing you can do with order flow when you get it for the first time is to trade with it, right? Because you don't have any experience, and you might be on a day where all your trades go right and you're massively confident, and the next day you blow your account. So trading with it when you first get it, it's a really bad idea, because you need to observe. So we give you some stuff to do, and it's observation, and it's have you ever been on a flight simulator, Chicken?
I've been on an actual plane. I mean, I've flown an actual plane.
Oh well, that's it. So I went on a flight simulator once, and I came away 3 pounds lighter and covered in sweat. It was tough. Now, when you fly a plane, you don't get any stress, right? Or it's easy.
Well, it was with a pilot at least, but
Yeah. So it's a bit like that. So what we want you to do is we want you to kind of get some skills before you take it back to your trading. So what we do is we get you to observe. Now, if you observe, you are not married to the outcome, right? You understand that? If you observe, you don't mind where it goes, right?
Mhm.
And
Of course.
and so
yeah, you're not really in it. Yeah.
But so if you try and learn and trade at the same time, what you do, well, first of all, you're impatient. And second of all, it's like trading Space Invaders. Like, why do you need to do that? If you want to learn this skill, learn it properly. But if you do trade when you first start, and you say, right, I'm going to observe, but I'm going to trade as well. When you're offside, you don't want to observe, right? And you don't feel good. So you you put a position on, and the market moves against you. And even if it's a sim position, you don't feel good, and you're not observing to the same extent. It's not nice to watch a losing trade, right? And then the flip side is you'll be happy about the winners. But the key is if you trade something you don't know, it's going to be a negative experience. But also, you just don't want to watch it. You're not going to engage once it goes against your way. And you need to watch it. You just need to watch it and understand the way it moves around and not be feeling bad when it does some things and good when it does other things. So you spend a few weeks just getting the hang of it. The best place to start with order flow is using momentum, right? And that's kind of common sense, really, because momentum is the being able to see that something's got some pace and something's got, some momentum in it and it's moving, right? And that is fairly easy to read. Now, the market turning around, you can read that in the order flow, but it just takes a bit more skill because it's a sequence of events and it's just a slightly more complex thing. So if you use momentum, a couple of things you can do very early on with your trading is, okay, I'm going to get into a trade. Is momentum against me? Right? You don't get in. You let it move down a bit more. And so is it against me? And then use momentum to manage your trades. And that's kind of the best place to start and build your confidence. But yeah, so it's basically a sequence of events that you need to go through. And I think the key for all of you, whether it's order flow or not, man, do not keep beating yourself up. You do not keep giving yourself negative experiences. It's not good for you because I've got one guy I'm mentoring at the moment and he does really, really well. And I've even gotten to the point where he stops trading on trades where it's really bad action. And you know what he does when he stops trading? He switches to sim. What's going to happen when he switches to sim? He's going to lose because it's a bad day. And he does that. I'm like, why do you do that? All you're going to do is feel bad, right? So if you can arrange your trading so you avoid a lot of negative experiences and try and get some little wins, you will have a much more fun experience.
Great. I really appreciate your advice.
Yeah.
Thank you.
Thank you.
Thank you for the question. I'll move you back to the audience. And just a heads up for people who are listening that want to ask a question and come up on stage, please DM me directly your question and then raise your hand and I'll invite you up on stage to filter out the trolls. But Justin, did you have a question? Oh, and keep your questions relatively short to make time for everyone.
Yeah, for sure. First, I just want to thank you for coming on here and talking to LKS. Yeah, so I started with Jigsaw like a month ago. I've been studying order flow and I've been paper trading on it. Specifically, I've been trading like SPY with the ES futures. But now I'm starting to think about going into like, real money trading. So do you have advice on going from paper trading to actual money trading, specifically when using order flow?
Okay, so first of all, that's a brilliant idea because one of the things that annoys me with the markets is that to trade futures, you can have a $500 account, right? But it is more risky, right? But what you just said there, trading SPY, is brilliant. You could trade 10 shares of SPY at a time, and but you need $25,000 to trade a market where you can take significantly less risk. So that is a brilliant idea. And what you need to do, because you're trading SPY, is you need to just start trading very small size. Don't worry I don't know what your commissions are, but like way back when I was trading equities, I started a very small size. You have to kind of discount your fees if you've got fees, because the fees will be kind of a big part of it. But start on small size, very small. Just get yourself used to live money. But I can tell you what happens in the professional world. What they do is they'll teach somebody to trade and they will give them some targets and say, right, when you get to this target on sim, we'll give you a live account, right? So this guy does that, gets his live account. Guess what happens? His trading goes down the toilet, right? As soon as he gets his live account, he can't trade anymore. Now, we're talking about new professional traders, but he gets over it and he gets his 3 to 5 contracts, wherever it is. Then he's doing really well and they say, right, we're going to up your risk and we're going to give you 10 contracts to trade. Guess what happens? Trading goes to crap, down the toilet again. And so there's this thing, is like you've got to accept the fact that each time you add risk, significant risk, your trading is going to go down the toilet. So when you move from sim to live, you will perform poorly initially, right? And you have to work through it. And what I tell people is basically, you should set yourself a target for your sim account, right? Because one of the biggest problems I have with people is they just go nuts. They'll start trading. They know what they've got to do. They've got the trade plan. They've got, I've got my trade plan. These are the setups I'm going to take. Next thing you know, they've done 60 trades and, lost a few $1,000s. What were you doing? Don't know. They just went nuts. So that's one of the biggest problems. So what I say to people, right, give yourself a 2-week or 30-day set of targets that you've got to hit to earn your own live account. So it could be like a few $100s a day, no more than $1,000 a day drawdown on your sim, and you've got to be overall profitable at the end of the period. You earn that account for yourself. When you get onto the live account, you have another set of rules that says when you'll go back to sim, right? And you should control it like that, right? But what you've got to do is just acknowledge that even if you go to like trading 10 shares on spot, right? It is going to impact your performance, and that is normal, and you have to work through it, right? And then when you go to 50 shares and 100 shares, same thing will happen. And it's just normal and natural, and you just have to work through it. But so do it. Make sure you know when you're going to go back to sim or when you go from sim to live, and make sure you understand what's going to happen when you do it. And it's not a problem. It's just work through it. Don't like beat yourself up. What am I doing? Right? It's just normal. Yep.
Awesome. Yeah. Thank you for your answer.
No worries.
Alrighty, next up on stage, we have Switch Side. Please raise your hand so I can invite you on stage.
Yes, hello?
Hey.
Hello. You can hear me, right?
Yeah, sure.
Okay, perfect. Hey, so my question was more like around advice, being in my shoes. I got into UC Berkeley out of high school. I only attended for a year, wasn't sure what I wanted to do. I started working at the bank. I worked my way up, and I have my Series 7, 663.
Yep.
I've worked with financial advisors and helped support their book of business. I'm going back to school to finish up my econ degree, because now I know what I want to do. I've dabbled in trading, and I find myself in the character you just described, like trying to learn, trying to trade at the same time, and then finding frustration. My question is more so like, if you were in my shoes, what would you like? I want to break into more so like investment banking, portfolio management, that kind of. But at the same time, I also do want to get like solid experience under my own hand. Like I want to get experience trading. So what would you recommend doing as far as like structuring classes, what I'm studying, and also like what I'm spending my time doing and learning?
Well, do you want to get? I mean, it depends really what you want to do, because like investment banking is not really trading, is it?
What was that?
Yeah, go on.
Sorry, like trading for like in that department.
Okay.
Yeah.
Okay, so if you're going to trade, so you're doing economics, right?
Correct.
Okay, so if you an understanding of economics is really good, really, really good for trading, and it's very good for macro trading, right? So I'd say if you're doing economics, you should definitely look at futures, because you've got interest rate products, and then you've got index futures, and when economic events occur like interest rate changes, you will understand what the effect that's going to have on currencies, what it's going to have on the yield curve, what impact it's going to have on equities. And so there is a kind of a dance that the really elite traders kind of trade this dance of like money switching between markets based on economic events. So certainly that is a very big plus on your side. I hate to say this, you probably want math as well to have solid math skills. They like to see that in trading firms. But the thing they like to see the most, right? The thing, if you want to go to a trading firm that's taking on new traders, don't tell them you trade already. Right? Don't tell them you've been trading. They don't really like people who've been trading for a long time at home. And do you have any experience in any competitive endeavors?
What do you mean, like?
Sports or chess or anything like that?
I mean, I in high school, I don't know how relevant that is. Me being like 5 years out of high school. No, I'm not sorry.
Okay,
That didn't mean to be rude. Just
so
like
here's what they look
for me to bring
what
up.
they like, right?
Mhm.
Is people that know what it takes. And the people who know what it takes are people like swimmers, competitive swimmers, competitive sports people, competitive poker players, competitive chess players. Because to get to a good level in a competitive sport, you have to do a lot of work. You have to do a lot of practice, right? And they know that if they get people that have been through that experience, those guys make good traders. So people who've done a competitive sport, or people that play musical instruments, right? Because it's the same deal with musical instruments. It takes years and years to learn to play an instrument, and they want people who understand what it takes to get good at something. So as well as economics is good, math's good. What's really good, get into something competitive, right? And really, when you apply, really lay it on about the competitive stuff, because they love that, right? So they think you're primed. Now, they'll want you to do what they do. So if you're also primed with like 300 crappy retail techniques, just keep that quiet. It's not gonna help you much. To say you've been a retail trader, right? So that would be my advice. Futures for economics, the sport or some competitive endeavor or instrument, and don't tell them you've been here.
Oh, I actually just saw he left the stage. Let me just see if
I might have upset him.
He said thank you.
Oh,
He
great,
said thank you.
no problem.
Oh, we have Chico or Eric here up on stage. He's the one that actually originally started going from more of a TA trader to now more so of a order flow trader.
Yeah.
You talked to him once before, but Eric, did you have any
Yeah.
questions for Peter?
Oh, yeah. Hello. Hey, Peter. How are you?
Hi.
Long time
Pretty
no
good,
see.
you?
I'm good. I don't
Cool.
have any. I guess my only question really is, so, I watch the markets day in, day out. Watch everything pace the tape, and everything you say, it does coincide with, what I do, what I study, psychology, my own trades, getting better, sizing small, confidence, all that stuff. And I guess I guess I was wondering if if there's do you have room for one more mentorship? That's my
Yeah.
question.
Well, to be honest, we'd have to have a chat about it. I don't. I shouldn't even say this. We'll have it. Okay, so I don't do paid mentorships anymore. I'm not going to say any more than that. But you're going to have to talk to me offline.
Okay, no worries. I just wanted to ask you.
Okay. Yeah. But get in touch, right? We'll have a chat.
Okay, definitely. Thank you.
Yeah.
Alrighties, that was very. Silver Star or Miguel actually was next in line, so you can come up stage.
Hey Peter, how you doing?
Pretty good, you?
Good, man. I got a question, man. I've been working about 6 months with all the tools here, and I'm starting to get pretty good with them. Do you know, or are you familiar with traders that just trade the first 5-10 minutes on momentum and do really well? It seems the faster the market, the better I do. And I really just don't know if that's something that's normal, or, I know you've been around prop shots and whatnot. Are there guys that's all they do?
Well, in terms of the
For instance,
speed of the
I'm sorry, like NQ.
Go on.
The
Yeah,
NQ is what I really seem to be good at. Seem to be the slower stuff tears me up.
Yeah, exactly. Because you just got. I'm not gonna. I don't want to be mean, but you've probably got a shorter attention span, right? I can't watch the interest rate products. It's just they don't move, right? I need to see something moving. But the NQ, that is a bit nutty, but that's your personality type. Now, there's a couple of things to note when you do that. When the markets, so basically you're not really an NQ trader. It's like you basically get on well with a certain type of market behavior, a certain type of volatility, right? So somebody we're all the same, right? So when your own market becomes more or less volatile than your comfort zone, you should switch to another market. So I'd say the first thing is with NQ, don't see yourself as an NQ trader. See yourself as somebody who likes that type of action, and at some point that action will disappear from the NQ. Like summertime, stuff like that. Move to the DAX. Move to something that's got the action you like. So that's the first thing. Second thing, I was told for a long time, don't trade the open. Yeah, I used to sit there every day looking at the S&P, watching the same thing go on over and over again, but I didn't trade it because I had this embedded idea that you shouldn't trade the open. And it's nonsense. If you see something in the markets that, like, there's patterns in the market that are just where the result is too small to take advantage of. But if you see something in the market, doesn't matter what anybody else says, if you can see it and it happens and it's fairly predictable, you can exploit it. So if you see the trade at the beginning, that's what you should do. Now, do I know any trader that only trades the first 10 minutes? No, but I think they all want to. But if you can, man, more power to you. There's guys on the futures markets that just used to come in and trade the rollover, which is once every 3 months. And that's a great job. A couple of days of work every 3 months. But yeah, he's like, the key, man, is don't ever ask anyone that question again. Because if you see it, if you can see it, right, it's there. You don't need to ask somebody else.
I can see it. The reconstructed tape really helps me out a lot, and I can see it. And I just didn't know if it was just me not knowing much, but it works a lot. And when I try to trade later on, it just ain't working as well.
And that's it. You see what I said earlier. People that think the traders that create setups are geniuses. You create a setup, Miguel. But the problem is you don't. It's like a confidence thing, and everybody's the same. You ask me about it because you're not confident. So you think but you created a trade setup. Well done. So now you trade it, right?
Okay, I appreciate you, man.
Yeah, well done for that, man. That's great. That's good to hear.
Thank you.
Good.
All right, next up we have Silver Star. Can't really hear you at the moment. It looks like you're speaking, but I don't hear anything.
That's right. Yeah, I can't hear it. You try typing it, Silver Star? It looks like they're trying to mute the mic and bring it back.
Okay, let me check the chat real quick.
Do you want to do something else and cycle back to Silver Star?
Yeah, I was just going to say that. I'm going to move you back to the audience for now, and you can DM me again your question. I can ask it for you. Robert Bunce, you're up next.
Hey there. Thank you for taking my question. Excuse the audio. I'm down here by the beach. But anyways, I was wondering if Orderflow is looking at order build, or are we looking at say, for example, the heat map where liquidity is and expecting price to move towards that liquidity? Or can you speak on any of that? And feel free to mute.
There's a couple of things, right? So order flows like anything else in the trading world, right? There will there's like, it's a shame, but there's really only so much you can say, and only so many tools you can create an order flow. But there's a constant need to kind of refresh and bring out new stuff. So one thing you got to be careful of is like avoiding all the new stuff and the hypey stuff. So the heat maps are okay. But the idea that the heat maps are the kind of the magic bullet is ludicrous, because the market depth that you see is the market depth that they want you to see, right? Right. So you can place a certain. So okay. Do you know what an iceberg order is?
Yeah, for sure.
Okay. Yeah. So an iceberg order is when you might display 100, but you really want 1,000 and it refills, right? So they place their iceberg order so that you can't see their depth, right? Now, the flip side of that is the guys that do show their depth have made a conscious decision to do so, right? So when you see like 300 contracts a level, and then there's a level with 1,000 contracts, they know you can see it, and they don't have to show you, right? So the market doesn't always move to liquidity. It's not the market. So what you need to do is order flow is like the heat map and the market depth is the least important part of order flow, because it can be faked, right? But it does have its uses, right? I'm not saying it's useless; it has its uses. But to say that order flow, that like a heat map or the market depth is the most important thing. No, what the most important thing is, what are people doing, right? And I use the two terms, order flow and order flu, right? Order flow is what they're trading right now. Order flu is your volume profile, where the positions are. So if you look at the volume profile, it will show you the number of contracts traded at each price, right? Or a footprint chart, something like that. And you need to use that information to understand where people are positioned. Because one of the causes of moves in the markets is people getting bumped out of position, right? So so I'd say you've got the actual trades themselves, the volume at price to understand where people are positioned, and the market depth is like it's just a secondary. So one of the keys, one of the things that's preached a lot, I'm not going to mention the name. One of the things that's preached a lot is that you should see excessive depth, and let's say you see a big offer above, a big sell order above, and you should sell in front of that. If you do that, you will lose money, right? Now, it's always a bit nuanced. So let's say there's a big offer above, and we're moving up to that big offer, right? You don't just jump in front of it, but you watch the other offer, you watch the other offers in front of it, and as you move towards it, if other people start front running that order, then you can do it, right? So the thing is, when somebody gives you something and says like, oh yeah, if you see large depth, sell it. What they're giving you is something I call a one rule trading system, right? Oh, can I just sell sell icebergs? And it's like, no, you can't. It's a one rule trading system. Don't be silly. Right? It's like if somebody boils down trading for you into a single rule, it's nonsense, right? So you can front run big orders, but it's very nuanced. There's times you can do it, there's times you can't. Sometimes the market is very likely to bounce the other side of a big order and then come back, right? And it's just like it's situational. But like, so yeah, you can get some use from like heat maps and the depth, but just you've got to know it's situational. And it's really important to understand is like, if you try and make that your only rule, it'll fail because you need to like understand what's going on in the market, where people position, what's driving it, and you need to kind of have a more holistic view of what's going on than just like depth buy, right?
Yeah, thank you. That's very
Makes
helpful.
sense?
Yeah, that's very helpful. Thank you very much.
Great. I will move you back to the audience, and then I'll proceed to read out 2 questions. The previous listener, his mic wasn't working, but he said, what is your opinion on the funded trader programs like Top Step and Lilu? Are they just carnival games? What are the order flow setups to combat the rule where losses are calculated on a trailing basis?
Yeah, I mean, the rules are strict, right? The rules are stricter than a prop firm, but then it's more of a mass. So, like, I'll tell you one of the things that is different. So, in a prop firm, if you've just been given a live account, you will have like a maximum drawdown, and those services have that too. But if you're, so maybe you've got your live account, you've got $1,000 maximum drawdown, and then some idiot politician says something, sends the market into a tailspin, and you lose 5,000, right? You think it's the end of the world. You think you're going back to sim. You go to your manager, so I've done this, and he said, "Don't worry about it. Everybody got hammered today." So there's that flexibility where they'll know if it's your fault or not. They'll know you couldn't avoid that. We'll skip it on that one. And so that's one difference, right? The other difference is the prop firms, the way they fund them. So you might get a prop firm where one of the traders has grown to the point where the firm's not funding him, and he may be funding other traders in the firm. So there's a lot of different ways to that money goes around in prop firms. But what I will say, if you're sim trading, right, and when I mentor somebody, the first thing I do, I get them to write down rules, and I don't care what the rules are. And I say, right, your next step is you need to follow your own rules. And that is the single biggest problem people have, is following their own rules. And it's really difficult. It's difficult for guys when they know they're going to have a meeting with me next week. I'm going to ask them what they're doing. It's really hard for people. So if you're at Top Step or Lilu, right, you've got some skin in the game, right? You have invested an amount of money to trade that account. You're just a bit less likely to wipe it out. Because if it's a sim account and you're trading on your own and you're not telling your wife what you're doing or whatever, you can just reset it. Nobody cares. You just say, that was a bit stupid. I won't do that again, right? Until next time. And you can reset it. That becomes expensive at somewhere like Top Step. So where I see a lot of the value, trader development and giving you some skin in the game without risking a lot of money. And I think that's important, right? And so I think it's a good service. Plus, you've got kind of people watching you as well. So you kind of got that factor as well. So I think they're good tools from that respect. That's where I see a lot of value in them. And the rules are strict, yes, but it's their money, right? Their money, their rules. They tend to be a bit stricter than in a regular prop firm, but it's a lot more accessible than a regular prop firm. So I think I do like them. I do like them. And I think for developing traders, just that just having some skin in the game is a brilliant thing.
Great. I hope that answers your question, Silverstar. I'm moving on to a question from Mr. Stonksman. It says, I like to pick your brain regarding what goes on in your mind when you're reading the tape. Number one, you mentioned the key thing you look for is momentum. How do you identify momentum?
Okay, so I guess the question I'd ask back is, can you cross the road? Right? Most people learn how to cross the road, and crossing the road, it's actually very, very complex, right? And it's amazing what your subconscious can do. But if you think about it, like you're watching two lanes, you're watching like if it's a two-lane road, you've got to watch traffic coming in both directions. You've got to calculate the speed. You've got to calculate your time to get across the road. And you calculate the speed of two oncoming vehicles in different directions, and you calculate where you can get across, right? And you don't do it, you don't work out in your head, but your brain does it for you. And Orderflow is the same. It's like when you first look at it, you won't see it, but when you practice, you'll know if there's momentum or not. It'll just be a lot more contracts. It's getting through prices very good. There's a lot more volume, and you'll also know when it's not there. So it's a bit like crossing the road, and it's hard. I couldn't explain it mathematically, right? I could say, yeah, we've got like good progression through prices. It's not pulling back much. There's plenty of volume, but I couldn't quantify it. I couldn't say how fast it has to get through prices or how much volume, but I can see it, right? So, I don't want to be too ethereal about it and too touchy-feely, but like it's a bit like crossing the road and estimating the speed of cars. It's like, I can see when the S&P opens, I can see pretty much from the open if it's going to be a really slow day. And sometimes if it's going to be a really fast day. Not always right, but right from the open, I know if it's a fast or slow open just because I watch lots of opens. Could I program it or write rules down? No. But, that is what it is. And that does scare a few people off, that it is a bit more discretionary or kind of feely than like a mechanical approach. But like all you got to do if you're worried about that is like think of everything you do, right? Tennis would be an immense amount of calculations to figure out how to return a tennis ball, but you learn how to do it, get better at it, and it's a skill. And it's just the same. It's no different from any other skill, right? It's just you get experience and you get better.
That is a very interesting way to put it. I've actually never thought about comparing like trading to a sport. It's very cool, very interesting.
I think one of the problems, right? One of the big problems in the world, right? At school, they don't tell you how you learn, right? And it should be the first thing they teach you, right? We're going to teach you stuff, but we're not going to tell you how you learn. So a good analogy is if you have driving lessons, most people have like 20 or so driving lessons, but you have one a week, usually 1 hour a week, and you don't improve during the driving lesson. But the next week, you're a better driver somehow, right? So you've had the experience in the 1 hour, and you're not a better driver at the end of the hour, because what happens is you've got like a computer at the back of your head, that does most of the work, and like you have the experience, and you kind of the skill gets embedded when you sleep and over time, and so that sounds a bit. People, is that really what's happening? And so if you understand how you learn, and you understand that most of what you do, it happens in your subconscious mind. Most skills are subconscious, right? Like tennis, driving, everything. You don't think about it, and this is the same. So once you understand how your brain works, and it's just a matter of feeding your subconscious over and over again, and then letting it do its job, right? It's not comfortable to hear that to people who want mechanical rules, but that's how we learn everything, and that won't change, right? And I would advise, there's websites you can go and find about this stuff. It's fascinating, but if you understand how you learn and how all that works, you will be a much better trader.
Hi, Peter. This is actually Mr.
Yeah.
Sonksman.
Hi.
So thank you for that answer. I definitely do hear what you're saying. I mean, basically, in a nutshell, you're saying like it'll come with experience on how to read tape, like in terms of looking for the momentum. But while I do agree with that, I'm looking for something like a little more practical advice. Like, because I feel like you could say that for any skill, right? You say,
yes, absolutely.
how can I get better at this? Oh, you just need more experience. Like, I mean, yes, that's true, but it's like I'm looking for like something a little more like substantial or tangible. So, for example, I'm a pretty newbie trader myself in terms of like starting to read the tape. I'm wondering for example, like it would be really helpful for me if you could verbalize like what's going on in your mind specifically when you're looking at the tape. Like for me, when I look at the level 2 data, like I use Thinkorswim. I'm going to the chart to look at level 2 data. I see a bunch of bids and asks, and I see price, and I see like a large. I see like the volume of a trade. Like, oh, some random whale just bought like 1,000 or 2,000 shares of Tesla or something like that. But then my question is that considered momentum? Like, how many of like those kind of giant bid or ask blocks like do I need to see in order to qualify? It's like, oh, hey, that is momentum. Ding, ding, ding. I can use that to make a more informed trade for me on what position I should take. Like, that's kind of what I'm asking, if you understand.
Okay, so and that's fair enough. So there's a couple of points on that, right? So let me just. So the first thing to note, right? If you go to a prop firm, and they'll, your induction's usually about 12 weeks, right? 25% of that is theory. The rest is hands-on, right? So they'll kind of teach you what's going on, and then they'll get you to look at it, right? So there's this thing that you see a lot in the on the forums, and they'll quote that 10,000 hours thing. It takes 10,000 hours to become an expert at anything, and people have kind of twisted that to it takes 10,000 hours to learn to trade. Which, if you're a prop firm, you would have already starved to death by the time you've done 10,000 hours, because that's like it's 5 years full time, right? So you can't just look at the markets. Right, it's like what are you looking for? You have to. It's guided, so you have to be told what to look for, but then you have to see it yourself, right? So you shouldn't just be looking at it without having some reference points. Now, level 2 in stocks, if it's traditional, it's the traditional level, like side by side. It's not like it's not a dumb, right? It's just a normal level 2, yeah.
It's not dark pool. It's just. I mean, you go ahead.
It's like you've got the bids and offers side by side, not the offers above the bids, right?
Yes, I believe so.
Yeah, that's tough, man. It's tough because that, to me, that's very hard to read because it doesn't move up and down. It stays static, and the price changes, but it doesn't move. So level 2 for me, I don't find it that readable. There used to be a game with level 2 15 years ago that everybody exited because the HFTs got them. But level 2 is tough to read because it's side by side. It doesn't, we don't have something moving up and down, which you're watching. But you can still have reference points you still have reference points to look for. But to me, it's the orders that are key, because it doesn't matter what you say you're going to do. We need to know what actually happens. And then if you know what actually happens, you can have a fairly good idea where people are positioned, right? And then when we reach an extreme of where people are positioned, you've got position. So if you think about a trading range, right? You're at the end of a trading range, right? And so I'm watching a trading range and I look for a few things, right? So I can tell you my thought process on trading range. First of all, I know a trading range is going to form because the price is going to move, right? So on a trend, price will move, and then suddenly we'll have a single price that trades an excessive amount of volume. And then it might move up past that and then move back down. And it will start threading over that price, right? That price might not be the center of the range that forms, but when I see a price with a lot of volume, I watch for us to keep crossing over it. And I know we're developing a range. And I know that way before any chart trader, right? Now, what do I want to see? I want to see a decent size of range. There's no point me trading a one-tick range, right? I want to see a decent size, you know, and I want to see the market flowing up and down. Now, as it gets to the extreme of the range, right, it kind of always looks like it's going to break, right? So I will look for certain things. If we are, and it depends on how many times you've hit the range as well. So, but if you're going to trade a break, right, what I want to see on a break, right, I will buy the high of the range if I think it's going to break, right? And I will do it in these situations. So if I'm on the S&P, I want to see the Dow and the NASDAQ like buying. I want to see buying on the Dow and the NASDAQ. I'd like to see them moving up, but I want to see buying, right? So I've got those guys on my side. I want to see heavy buying. So I want to see like really aggressive buying on the S&P. And I'll put buy order in near the top, right? Because of that momentum, okay? So what I'm saying is like everybody is gunning towards the top. 3 markets aligned towards the top. So I think there's a chance it's going to break, but it's a range. If the range breaks, it's going to run. People get stopped out. If the range doesn't break, it's going to just drop back into the range. So my thought processes are, I can see they're hitting solidly. If it doesn't break, I'm going to potentially lose a little bit of money, but it won't be much because the non-break is also not a fast move. Nobody's reacting. So what I will do is, as long as the other markets are on the like trading into the offers and people are buying and maybe moving up, I will keep that bid on. Right now, the moment the Dow and the NASDAQ start falling back, or the S&P volume dries up, I just get out. So I'm getting in because I know the other markets are gunning it. I know that I've got a bit of a safety net in that back into the range is a bit of a slower move, and I'm just sitting there in a position waiting to see if it breaks, right? And you know, if I see weakness anywhere else, I just get out. So that's a set of thought processes, right? With different like components, like, you know, no, you don't have to be right all the time with a break, because the move your way is going to be way faster than the move against. You know what the volume is on the range, so you've got an idea how people are positioned. So you're kind of building that picture. So that's basically what I use. But I've got the order flow and I've got the volume profile to lean on. If it was just the bids and offers on level 2, I would struggle. I don't think I could do it. I really don't think I could do it. Doesn't mean you can't, just means I can't.
Gotcha. Okay, thank you, Peter. That's very helpful.
And you know what? If you want to ever call me up for a chat, we can have a chat about some other stuff. It's absolutely fine.
Yeah, no, absolutely. I would love to take you up on that offer. Just one final follow-up. I do realize I'm asking a lot, but this is really interesting for me.
Yeah.
So one thing, you know, you said in your last response was that, you know, you're constantly monitoring the indexes SPY and QQQ, and once you see, you know, weakness or selling in that, then that immediately is like a warning sign for you to get out of your trade.
Yeah.
But what do you do on days like today, for example, with certain tickers like Tesla, for example? Tesla's been on a rampage like this week, and I would say QQQ and SPY, while they are like nearing all-time highs, they've been relatively flat. Like QQQ is up maybe like 0.3% today. I think SPY maybe moved like 2 points, but nowhere near like the monster move Tesla's been having these last few days. So given, you know, your framework, if I was to be trading Tesla off that, I would simply not trade Tesla because I'm seeing weakness in you know, the indexes. So therefore I should not be trading Tesla, but then I'd be losing on a lot of money. So I'm curious, you know, on tickers that do seem to show a lot of strength, even though the indexes are not showing strength, how do you kind of adjust your, you know, how do you adjust your approach in a situation like that?
Well, basically, okay. So from a correlations perspective, there's correlations that come and go. So the indices are fairly they're fairly well correlated. There's different index futures, but this is what I tend to do with them is if I start to see the Dow, if I'm trading the ES, if I see the Dow go one way and the Nasdaq the other, I can be pretty sure the S&P is about to go into a range and stop doing stuff. So I'm quite happy when the correlations fail, but I'm trading macro, and so it's a different kind of correlation to what you're trading. So Tesla's going to be on a tear because there's excitement and there's news or whatever about it, right? It's not going to go on a tear without something happening, right? So the key is to know if something's happening, right? If you don't know why Tesla's on a tear, it becomes a little bit more difficult. But if it is on a tear, right, and the correlations aren't working, all you got to tell yourself is, you know what? Today the correlations aren't working well for this. Doesn't mean you can't trade it. Just means you've got to acknowledge it and decide whether you're going to go in without the correlations. But you've got to know why. And I'll tell you why. The biggest days you'll ever have in trading, right? There are days where some politician says something, or there's a bomb, or there's this, or there's that, when the market is just going to be on a tear, right? Those are the days where, like some of the prop traders I know, they'll make multi-million-dollar days, right? So what they do is they have their ear on the news, so that when the market's on a tear, they know why. So if the market's on a tear and you know why it's on a tear, you can load up on that. But also the one key thing to remember, don't wait. You're like with order flow, you're trying to refine your entry price. You can't refine your entry price on those days. So when something's really, really running, you can't get a good price. we got this saying. Well, I probably can't use this saying because that would offend people. But you've just got to get in. With those fast markets, you just got to get in. So, but you'll only do that if but you've got to have that confidence that there's a real driver behind the move. But you're not going to be able to refine the price. Sorry, go on.
Yeah. So, I mean, today I think is a great example, or this week in particular, it's a great example of, the politicians doing things that move the markets. Like Biden just passed the infrastructure bill. There's a section in there where he's basically promised to allocate a certain portion of it to EV funding. So that is one major catalyst for Tesla. So, given that information, do you suppose then it would make, so, I mean, now I know, like, that to me is the main reason why Tesla's been moving, or at least in my opinion, that's why it is. So now that I have that information, like, how should I be looking to formulate a trade off that? Do I just buy, like a weekly, or how do I guess, use that news to my advantage to make a trade? I'm kind of curious. I just want to pick your brain how the framework of structuring a trade goes once you've identified a catalyst that you believe in and you think there's room to run up. Well,
for me, I just trade futures. So I wouldn't buy an option line, but I trade futures. And what I do is I just know that if there's the news and then the big move, it's probably related, right? I also know that you can't get into if you're a large firm that's going to load up on Tesla, you can't do it in 1 second, right? It's gonna take time to get in, right? You can't buy a couple of million shares in one order because you'll move the market too much, right? You won't get a good price. So I know that it'll take time for people to get in, right? But I can see everybody's trying to get in. There's urgency, right? So if I see that urgency and there's a cause, I just have to presume they're related. You'll never know. And then I will also know you can't finesse your way in. You just got to get in, right? You get in and you start piling in. So I wouldn't go to another asset class, onto options or something, but I would just acknowledge that the way I normally finesse my way into a market, if I do that, it's just going to leave me behind, right? I've just got to get in and maybe get in with some smaller size, and then when it moves your way, then then keep adding. But it's tough because with markets like that, you keep waiting. It goes up and it goes up and it goes up. And you say, right, I'm just going to get in with a few contracts. The moment you do, it starts moving back, right?
Right.
You got to hang on. It's going to move up and down, but it's really hard to get a good price. Really hard to get a good price, right? So you just have to grit your teeth, right? That's the effect we have to do.
Got it. Got it. Okay. No, thank you so much for the helpful responses. Love to take you up on that offer for additional chat offline. But thank you. I'll let someone else go. Thank you, Peter.
No worries. Okay.
All right. Before we continue, we are almost on, I guess, at the end of the session. I don't know, Peter, we did still have a few questions. I do want to be time conscious about whether or not you can stay for. Yeah, do you want to take a sip of water?
Yeah, just get rid of me when you're sick of my voice.
No, we're not. Okay, take a sip of water. I'll ask the next question. Got a guy asking, in the context of trading the ES, what are some other tools on Jigsaw that you use to help determine the pace of tape? Do you recommend using the sound from time of sales, pace gauge? Also, what are some good sizes to filter through on the time of sales for ES?
Okay. Yeah, for me, I can, we've got like a pace of tape meter, and we've got some other tools like the gauges and stuff. To me, they're like your trainer wheels, right? Just to get you like into the concept. All I need for the pace of tape is to look at the depth of market, the dome. That's all I use. I like the tape. I like the tape itself, the filters. You have to change over time, right? So a couple of years ago you've been looking for 50 plus, and now you might be looking for something smaller. But for the tape, what I really like to see, I like to see one side getting hammered, like one side like really putting some size in and not getting anywhere. That kind of thing I like to see. That's a good thing for the tape. But main momentum, I'm looking just at the dome. And then when I find a spot where I want to get in, I'm going to look to see if somebody, there's a lot of size on one side on the tape that's stuck, because that helps me. I'm going to look at the pulling and stacking of contracts, because that helps me. So it's different things at different times, and your main focus is on the depth of market, and then when you're about to get in, you're going to look at a few other things to kind of see, if there's any red flags anywhere else, and then you get in. But we're all different, and different tools people kind of attracted to different tools. So basically, if you can't read it, don't use it. And I would say the other thing if you're a futures trader, for the S&P, if you're looking at stuff that's on more than one screen, you got too much. So if you keep the things you're making decisions on down to one screen, you've got a fighting chance. If it's 6 screens for the S&P, you'll never make consistent decisions because you've got too many data points. So use what resonates with you, but don't use too much. More isn't better. More is not better, right? So just don't use too much. If you've got 100 data points, it's very difficult to consistently make decisions based on 100 data points. In real time, right? So just don't use too much, basically.
Got it. Okay, one more question from the DMs. Can you use the high-low ticker to find good trades on order flow? If so, how many daily orders would you consider good?
Oh, the high-low ticker, I don't know what that is.
Okay, me neither. I don't know.
Yeah, I've probably seen it, but not heard it called that.
Okay,
but,
I
I don't know what that is. But basically, there's loads of tools, right? And if it works for you, it works.
Okay, I think Harry Habibi Wong wants to come up on stage to ask you a question. He's been waiting in line, so come on up. I invited you to speak. I think you have to accept my invite. Going once, going twice. Okay, I'm going to invite the next person. 1Z.
1Z. Oh, are you in is this somebody sitting in a onesie?
I've been known to, but not now. I have a question. What are your thoughts on VWAP and those kind of indicators? Do you consider those part of order flow, or is it something else entirely?
Peter heard VWAP and went silent. Hello, are you still there?
Yeah. It's the onesie thing. Probably think I can see them. Yeah, did the audio from onesie come through?
Could you hear my
Okay,
question?
these technical issues with Onesie or with me? That's
Oh,
weird.
no. Okay, maybe you didn't hear his question. He was asking what you thought about indicators like VWAP. So like technical indicators.
Yeah, I'm not a big fan of indicators. How do I put this? I don't annoy people, but stuff like MACD and stuff like that. I just don't get it. I don't get that that's an actual thing that has an effect. So I like to see like people positioned in a place and get run over. That's a good thing to me. So indicators generally that are just based on price, I'm not a big fan. But VWAP is a little bit different, and the reason VWAP's a little bit different is because there are execution firms. So if you go to an execution firm and you want a million of a particular share, you can't. There's no real way to know if you got good executions, right? Somebody's going to buy 1 million shares for you. There's going to be all sorts of different prices, over time that you bought, eventually built that position. So VWAP's an interesting one because that is a measure of value. So if you build that 1 million share position, it's measured against VWAP, and if you can beat VWAP on building that position, you've considered to have done a good job. So I think that's interesting. I don't actually know if it's still used in industry. I kind of presume it does, but you'd have to research that. But what I would say is if nobody is building a position and there's no reason for it, it's probably not going to help you on that day. So, if I was going to use VWAP, I would first validate it's still used to assess executions, and then also figure out, if is there a way you can tell that it will be being used on a particular day for a particular stock. So it could be being used any day for any stock because people like Fidelity are going to be buying stuff based on their research, and they're not going to announce it in advance, right? So they're not going to tell you that they're into a particular stock, so you can track the VWAP. But I would try and get a bit closer to figuring out when it's relevant in terms of maybe there's some news event or some triggers that you can use to kind of enhance VWAP. So I think that's a good one. Most indicators are nonsense, like Ichimoku Cloud. What's it all about? Why? If you can just have the price, and if you're like me, if it's going up, I buy it. I can see if it's going up. I don't really need somebody to tell me. But things like VWAP, yeah, I can see there's an edge in that. But it won't be as simple as putting it on your chart and reacting to it, right? There will be a little bit of depth to it and a little bit of nuance. And of course, everybody just wants to put something on the chart, figure out the best settings and make money, But they're not doing it. But those that kind of scratch below the surface and say, "Oh, VWAP's interesting because it is a measure." And if I can figure a bit more out about it to make it more reliable or to make it sing and dance, it's good. But if you just added VWAP to a chart and tried to trade it, you would think it doesn't work, right? Because you're trying to oversimplify things. Markets move for a reason, right? And the reason isn't the line on the chart. It's but the line on the chart might help you find the reason, but the reason's thing. It's a lot easier with stocks, right? Because you get you get earnings reports, you get all this stuff. So with stocks, you kind of know the reason. I think, or rather, I should say, with stocks, you can focus on reasons, right? And so you've got a bit of an edge there. But you got to dig deep, right? You got to look at why, because everything will fail if you use it too simplistically.
I agree. I use it more in conjunction with other technical indicators, and then when a couple of 2, 3, 4 things align, that's kind of when I decide to make my orders, whatnot.
I think Angela went to sleep.
No, I'm here.
Hello?
I feel like you don't.
Yeah,
Do you not hear?
Am I coming in and out?
No. I think you just don't hear Onesie for some reason because I hear him
that's
fine.
Onesie, it's not on purpose.
Okay, Onesie, what did you want me to say to Peter?
No, thank you for his answer. And maybe he can clarify. Maybe I'm the only one who doesn't understand. What's reading the tape exactly? Is it level 2? Is it something else.
Okay, so Onesie wanted clarification on what exactly reading the tape is. Is it like level 2, or is it just like it's mostly just the buys and sell orders coming in and out, right? But I'll let Peter answer that.
Yeah, tradition. I mean, you don't want to box it in too much, but traditionally tape reading is reading the orders, right? You're watching the orders, the size of the orders. That's what tape reading is, and that is the main skill. And then that's that's really the order flow is, and all different order flow tools are just different ways to present that. But it is the trades. But like you don't nobody just says I'm going to use this and nothing else. So again, you bring in other things like the volume profile, the volume price, very useful over time. But yeah, it is basically just reading the orders.
Got it. Thank you for your time.
Great. He said, thank you for your time.
No worries.
Got a few questions, a few now actually in the DMs asking what books they should read about order flow. I feel like you might say, don't read books. I mean, we'll see.
Yeah, it's like that's like saying what book. And okay, I'm not saying it's a stupid question. It's a fair question, but like it's like saying what book should I read to learn to ride a bicycle? It's like you get on the bike. So what you need to do, and what we do, we give you the theory first, and then we put you on the bicycle. We tell you what it is, and then you have to work with it. So you can't really do it from a book because the order flow is a living, breathing, moving thing, and books aren't. So they don't really relate. So, but you just need reference points from somebody, and then to watch it, and you'll either get it or you won't. Basically, and it should be like a week or something. I mean, we tell people about an hour at a time. Do it for an hour because it is quite intense when you first start. It's a new skill. Do it for an hour and then stop, and then maybe do that twice a day, and you'll start seeing stuff that keeps going on over and over again, and that's your book basically.
Yeah, I hear from a lot of order flow traders, including Chico, who I kind of watched him learn order flow over the past few months, and it's just screen time. It's just literally sitting in front of the screen from market open to market close, and then you can also watch the futures after or before, and just understanding, oh, this is what happened when this happens, and this is what happens when that happens, and gaining experience through that way, right? Yeah. Yeah,
absolutely. But it's guided. You can't just watch it without knowing what to look for. Right, so it's got to be guided, right? If you don't, you got to know what you're looking for. You will sit there forever, which should be very sad.
Yeah, I actually had someone on Twitter DM me saying like, "What are these like black boxes and red boxes, and what do they mean?" It's like, oh, there's tutorials. Jigsaw has tutorials, right? Like a lot of like educational videos. On the video,
it does, and we can't. Yeah, it does. There's a lot. I think it's about 10 hours for if you get the free course that comes with the product is 10 hours. The advanced is another 7. But yeah, it's with stuff like this, if you join up, it is 10 hours of education, but don't do it all at once because it won't stay in your head. Be patient and understand how you learn and do a little bit at a time. I know you want to make it as a trader, but you can't cram it. Do you know what I mean? You want to make it, but if you keep trying to get through it too quickly, you won't be able to do it justice. It just takes time to learn stuff. That's all. But nobody wants to know it's a bit of work. Everybody wants a system. But at the end of the day, you're looking at a profession. I know people who can have $1 million days, and that's worth focusing on. But if you shortcut it, you'll end up looking at this for 15 years and not making any money. And if you keep shortcutting everything, you're just better off getting a part-time job at McDonald's. That's what you should do in your spare time. So all of the shortcuts are just ways to spend more time learning, right? So it's not what people want to know, but like prop firms, they take on interns and they pay the intern while they're training them, and they fund them, and they want their traders to be profitable as soon as possible. And this is what they teach them, right? In the prop firms I work with. And they don't do that because it's like some kind of secret squirrel stuff. It's just because it's the fastest thing to get profitable on, right? But you have to just take, it just takes a little bit of time, right? And it is what it is, man. And like a lot of people don't want to hear that, and they will stick to the magic bullet things. And later on, they'll get the realization that this might actually be a skill. And some people drop out, some people treat it like a skill. And that was the way it was for me at first. It's just the industry. It's like you don't know what this is before you get in, and you see all these these people dangling carrots about like zero work systems, and it's unfortunate. It is unfortunate, but it is what it is, right?
All right, we have Tower, who is actually one of our notable traders here on LKS, and I think he has a question for you.
Hey, Peter. Hey, wanted to ask a question of how can you use Orderflow to kind of spot themes or shifts in the market? I know for a particular ticker, you can see it. The order is going through.
Again. So strange.
Can you hear me?
You not hear anybody else other than me, Peter?
I can hear you, but for some reason I can't hear the guests.
That is very weird. Jackie, do you know why that may be? Because you could hear earlier speakers. What changed?
No, but if I click on his name, the user volume is there. Let me mute him. Can you say something again, Tower, see if that helps?
Yeah. I was wondering, how do you use Orderflow to spot themes or shifts in the market?
No, I got nothing.
Okay, I can't hear you. Oh, okay.
I guess I can't use the technology.
I can hear you, Tower. I can hear you,
Okay,
Tower.
okay.
Yeah, so I guess you can type it out, or you can say it and then I say it again, but maybe typing it out would be easier. I don't know. Whatever you want to do.
Where do I type it at?
The amphitheater chat right above amphitheater.
Okay. I'll try that.
Okay. And then Jackie, can you actually look into why maybe we're experiencing this technical difficulty? I don't know why this is happening.
It's my age.
Oh, Chica, why are you here? Hi, Eric again.
I think Peter should just disconnect because we can all hear Tower. So I think I'm gonna be end on Peter. So Peter should just disconnect and reconnect and see if that fixes anything.
Okay, yeah. So suggestion is for you to disconnect and then connect again. You want to try that?
Okay, I can give it a go. Let's hope we don't disappear completely.
Oh, there he goes. Then if you could raise your hand again, or actually I'll look for you in the sea of people and then invite you on stage. If I can find you. Peter, can you raise your hand? It's going to be on the bottom of the screen. And then my mods, if you see him, can't see him. Oh, where'd he go? Where'd he go? I think he disappeared entirely. Is there a way to invite people back on stage? Oh, here we go. Invite, maybe this.
You're looking for Peter?
Yeah, I'm looking for him in the audience, but I don't even think he's connected with the audience right now.
I took out my question.
I'm gonna invite him again, like through the DMs, and see if he can just join that way. Oh, there you go. Hello again. Okay.
Hi.
Howard.
Sure.
Hey,
Peter,
I
I
hear
have
you.
a question.
Great.
You can hear me? Okay.
Yeah,
So I
perfect.
have a question of how do you use order flow to kind of spot themes or shifts in the market? I know with a particular ticker you can see it, but then how do you see like shifts from like EV to technology or banks all of a sudden within midday or something like that?
Yeah, you wouldn't use Orderflow for that. I mean,
Okay.
Orderflow is, typically with Orderflow, you know which instrument you're going to trade, and it's helping you to trade that instrument. So,
Yep.
shifts between sectors. I'd just use an online scanner, something like that, to see it moving.
Got it,
It's
got it.
not something I've
Okay.
tried.
Okay. Yeah, validated my initial question.
Yeah.
Okay. Cool.
Cool.
Cool. Okay. We have a lot of other people on stage questions, but I do prefer you guys to DM me first with your question, and then I'll invite you on stage. So if you have a question, please DM me first your question. I have another question in DM saying, how would you predict a day type in advance? Or what things are actually predictable in this market? Oh, I guess another guy asked the question of like, because I know it seems like order flow, I guess in my opinion, is used for more of like you use it during the day. It's not so much like can you use it to kind of predict the future price of a stock, or is it more just like it has to be like a day trade on the day?
Well, order flow can be used to get a better price. That's one of the uses of it. So, you're watching the order flow and to refine your entry. But if you're going to be in that trade for a year, it's probably overkill to try and do that. But in terms of the day type, basically, day types come from market profile theory, and I don't think there are day types anymore. Maybe there never were. There's basic market states. So the day might start off one way, but then change because something happens. So, and it's really, you just see the market dry up, or you see activity come in, and hopefully you've got your ear on the news, so you actually kind of know the driver. So, it's the pace that will change, and hopefully in reaction to something that's happened. But sometimes the markets just dry up, right? If you look left, you can generally see, if you look left, we say this thing where if Monday was within Sunday overnight's range, you've got a good chance of a dead week. So you get like an overnight range in Sunday, Monday stays within it, Tuesday stays within that. It's like you might as well forget it for the rest of the week, because you're going to be waiting for that break out of that for the decent action. So there's lots and lots of ways to determine the day type, and order flow is just kind of like an additional component of it, or market state type, I should say. So just be aware that like however the day starts, it might not end that way because there might be new events that occur that change things around.
All right, and I think a follow-up question, and I think you kind of already touched on this, but got a question from Bear Goes Long. He's asking, what signals are you looking for on the ES or NQ to indicate short-term reversals?
I like to, so if it's, to me, short-term reversal, I like pullbacks. And there's a number of different types of pullback, right? So a pullback might end so if the market's moving up and it starts pulling back down, we might hit a point where sellers are selling, but the market stops moving and we just build a lot of volume. So they get stuck, right? So that's one way a pullback will end. It's not my favorite, and it's not my favorite it's because it's so easy to see, and because there's a lot of volume in that one place, which can get nudged around to put them out of position. So with a pullback, one of the ways is a lot of volume at a price they can't get through. A better one is it just kind of dries up. You see trading against the trend, and it just kind of it just stops. It doesn't stop, but like it just slows down to the point. And I hate to say this, but like there's just like a point you get to, you think to yourself, right, it's done. And then that's when I buy. I can't 100% explain why I kind of feel it's done at that point in time, but it's just after watching a lot of them. So, pullbacks, there's different types of pullbacks where people might be stuck, and pullbacks where people just aren't interested. And the trade confirmation for those two things is also different. So your trade confirmation where there's a lot of volume, you're probably going to see a little bit of stop run as it continues back in the trend. But if there's no volume, if people just weren't interested, it's going to be a more lazy continuation, right? So we're always kind of building that story of what's going on. I hope that helps.
Hope that helps. Bear goes long. You can definitely type in the chat. And so far, don't think we have any other questions.
Hey.
So last call for any questions. Please DM me, or else we're probably going to call it a night. Oh, okay. Apache got a quick question. Do you have strategy things you look for when seeing if an iceberg has follow through?
I like icebergs. I like icebergs from the perspective of it's the easiest thing to teach somebody to get them to understand the significance of what we do. But there is too much stock in people put too much stock in them because they're easy to read, right? So if something's easy to read, everybody can see them. But if the market is being held by an iceberg, what it gives you, it doesn't give you certainty so much. But if you see an iceberg and you think the market's going to hold there, you've got a very well defined risk. It's because it's just the other side of the iceberg, right? I mean, give it a little bit of wiggle, but if there's an iceberg holding the market and the market doesn't hold, you get out. So I would say the benefit of icebergs isn't so much in them being very, very reliable. The benefit is in the small stop you can use when you trade them. So, there's people see like the risk in trading as like being all about number of ticks. Sometimes it's about pace. Your losing trade's got a slower pace than your winning trade. But with icebergs, there's certain places you can look for them, but they're not like the magic bullet. They're like anything. You can try and trade against the iceberg, but there's a whole nuance behind them. Like, where is it in the action? At the bottom, at the low of a pullback, they're pretty reliable, right? Because you haven't got any energy in that direction anyway. But like, if a market's like really really moving up, like really tearing up, and then it just stops momentarily for an iceberg on the sell side, it's probably not going to hold, right? I think if you've got a trend, even if there's an iceberg, it's still higher probability to continue the trend, right? But in other places, like when it's a bit quieter in a pullback, I think it's a better probability trade. But anyway, it's not about win rate. Icebergs are not about win rate. And I know we are beaten with 90% win rates all the time in our emails, but you can be right half the time. But because the win is so much bigger, because people get stopped out from the iceberg, that's why you're trading them. You're not trading them for the win rate. You're trading them for the fact that you just get you're not risking much for a bigger reward.
Yeah, I hope that answered your question. I have another interesting question. He actually is asking if there's any gap in the market for order flow software. He's a programmer and he's looking to develop advanced order flow trader tools to enhance his own trading as well as potential side income. So kind of like what you did with Jigsaw in the beginning, right?
Yeah, with Jigsaw, basically, I was just too lazy to use all the existing platforms the way they were. I thought they'd be hard to read. Is there a gap? If there was a gap, I wouldn't tell you because I would fill it. But I'm sure there is stuff that I don't know. But I think so there might be a gap. We're doing some stuff right now that fills a little gap, but it's strategy related. I'm just trying to think. It's a really good question. I would say almost there probably is, but I don't know any that I'm not trying to fill. But I think there's probably, if you're writing software, I think there's probably bigger fish you can fry than jumping into Orderflow, which is in vogue and lots of vendors. Because the one thing you can be sure, if you fill the gap, somebody else will copy what you do, right? I mean, with our latest release, we added we've added charts to the app. So we had a trading platform that had no charts, and they're not supposed to be like 3,000 setting charts. So even the colors that we use are mathematically derived colors. So, for example, if you change your background, you can still see everything, if you change your background color. And I sometimes go down Facebook and I see our charts and I realize it's not our charts. It's just the competitors have copied our colors. And it's like, are you so lost for ideas that you think the edge is in the colors that you copy? It's absolutely amazing. But I don't mind. It kind of it makes me laugh. But what you want to do if you want to get into this business, you need to kind of give yourself some kind of a competitive moat. Look at what your competitors do. Do stuff in different technologies that is hard for them to reproduce. That's your key. Because if you do fill a gap in order flow, there's a whole bunch of firms that will just copy it, and they've got better marketing than you. And it would be a shame for your first venture to flop because somebody else makes more money from your idea than you do, right? So, but good luck with it. And and obviously, if you find a really good gap, you can patent it. And I did consider that with Jigsaw, but it involves spending lots of time with lawyers, and I decided I didn't want to do that. So, so I'm quite at peace with that. But good luck with your endeavor.
Yeah, for sure. Good luck. I have one more question from Mr. Stonksman. He said, how much should we look at futures to predict how the market will open the next day? I've experienced some situations where I see really negative futures during the nighttime and then freak out about the market crashing the next day, only to wake up to see futures have significantly recovered and the market actually opens flat. How can we avoid panicking in these fake out scenarios?
Yeah, you need to chill out a bit for a start. Basically, I wouldn't even bother because if you look at the volume in the overnight trade, it's almost insignificant compared to the day trade, right? So there's a couple of things that go on with if you trade index futures, for instance. If the futures open a long way from the stocks, right? Something's got to happen at the open, right? So the futures can't be like a million miles away from the actual index, right? That's because arbitrage traders will step in and bring it back in line. So if the futures are quite far from the stocks, you're gonna have to be a little bit careful at the open because it's got to come back in line, right? And you don't know how that will happen. But the overnight volume and the overnight move, the first thing that's going to happen in the day is the US traders, which are much bigger, are going to basically, can look at that move, figure out what they think about it, and trade it accordingly. So there's going to be a reaction to that move, but the volume overnight is nothing compared to the day. So, the daytime rules basically. So, I think a lot of the overnight's an interesting time, but I just don't think it's I don't think it's king. But if you've got big news and an overnight move, then it's likely that the stocks will go to move the futures. But you do need to relax. So the future's going down. It's good. I guess you guys don't see markets go down, do you? Because you're quite young. But yes, once upon a time, markets went up and down. And going down was fine. We were all happy either way.
Oh gosh, I wish Pooh was here. I would love to hear you two talk. I'm just gonna ping him real quick to see if he's online. He is someone that is very bearish about the market currently, and he's always screaming this is top. Why are retail traders still buying it up? When are we? He's always going short on positions. So it would just be interesting because he experienced 2008 and when the markets were going down and everything. So we're gonna ping him and see. I just would love to hear the conversation between you two. But it looks like he's online, but we'll see.
Yeah, it is kind of crazy that we went through COVID and the markets went up.
Mm-hmm.
I know some hedge fund managers that stopped because they just didn't understand it and they didn't know what to do with it. And I spoke to it wasn't a hedge fund manager, it was a fund manager recently. I said, how are you handling this? Because cash seems dangerous because they're printing so much of it. You can't put it there. Interest rates are basically zero, so it's not going to go there. And then stock market's overpriced. So I said, what do you do with it? And he says, well, yeah, it's no good answer to that. But he said, look, we're going to keep buying while it's going up. Right, so that's what we're going to do. That's our strategy. But we do have a real eye on it, and we're looking for other things. But it's just the markets, right? The markets don't have to make sense. And I think what's happened is there's so much money in circulation, it's just found its way to the markets. And it's not, it's strange, but like, the people say that like you can't print money forever, but what if you can? You know, it just goes up forever, right? But I find it all very strange. So Puma, what do you think about this?
Hey, first of all, nice to meet you. I was listening to your talk earlier on, and then I had to jump on a work call, so I may have missed a little bit of the middle. I'm guessing we're talking about just quantitative easing in general, and maybe even a touch of modern monetary theory. Is that correct?
Well, yeah, it's just the markets don't make a lot of sense. You know, just going up by such percent, the economy is not growing at the same rate the market is. And
No. I mean, that's been a big point of mine, which is, look, GDP is not supposed to correlate with market value because GDP is technically the addition of all revenue generated, and it is a backwards-looking measure versus valuation is profit, not revenue, and it's a forward-looking measure. That said, we've never been this detached ever. I mean, maybe I shouldn't say ever, because maybe at the end of the roaring 1920s, not 2020s, something like this, if we were tracking measures, could have been correct. But we've never been this detached ever. And the market is just pricing in pure perfection on future earnings. I mean, we've had...
I think, to be honest, I don't think anything's priced in. I think it's just money has found its way. Money's got nowhere else to go. And it goes to the markets, and the markets go up. And it doesn't make sense. And it should revert. It should pop. But there's also a possibility that it won't pop. It's just also a possibility that maybe it won't pop. Maybe, you know, it seems impossible, but it's a possibility. And it's a tough thing if you want to retire and you're putting money into retirement. It's very tough.
Yeah, I mean,
put a bunch of money in now.
So it's not about whether it's going to pop or not. So the Treasury is buying 120 billion per month, right? Multiply that by 12, that's 1.4 trillion per year, correct?
Yep.
So by this time next year, there's going to be 1.4 trillion dollars less in the system. And when you do that, you also do mess up the carry trade. So I do think Japanese investors will pull a little bit out of the Treasury market too. So what that'll do is that'll create room for money to move from equities to bonds. But the rate at which that will happen, I don't know if that'll necessarily be great enough that it's going to create this massive sell-off. It may just be that it's a smaller correction and earnings continue to grow because we've created this multiplier effect by pumping all this money into the economy, and everyone is buying a TV, and the TV manufacturing is buying more steel, and the CEO of that TV manufacturing company is buying a private plane, and like multiplier times multiplier. So it may be that earnings catch up or continue to grow as that 1.4 trillion is taken out. And it may not be that bad. It may be a 10% correction, and then, you know, we may be back on our way up at a 6 to 7% annual kind of real growth rate in terms of the equity markets. The thing that I do is I look at things as a probability distribution, right? And I think, well, that's all priced in the sense that the market is already saying that's going to happen. So I always think of it as like symmetrical risks. And I've been saying that the risk is asymmetrical. The risk is on the downside. And of course, I've been somewhat hedged, but overall net short. So I've definitely, you know, had a very, very painful time since the beginning of April. But those are kind of my thoughts on liquidity and what that's doing to the market. Eventually, some of that liquidity is going to dry up. It's just, is it enough to really counteract the growth in underlying earnings?
Yeah, I mean, my take on this is like the price of anything is simply a perception of value. The price of anything is like it's nonsense, right? Like gold, it's like people perceive gold to be valuable, and that's what keeps the price. If people start, if we lose that perception of value, it goes down. So I think the key thing is, when will people generally have the perception that the markets are going, they'll have the perception that the markets are going to go down. The fact that markets are overpriced doesn't seem to bother anyone. But when people perceive that the market's going to go down, that's when they get out. And that's what we're looking for. So it's perception. But like everybody's so excited now, like Bitcoin, GME, AMC, all this stuff, right? There's so much buzz, and nobody seems to worry about what something's worth. That's all, right?
It's true. I would make a distinction about ownership, though. So I think the vast majority of the 40 trillion.
I've lost you, Puma. I've lost you.
Oh, am I better now? I'm. Hello. Is this better?
I lost you. Have you lost the audio, Angela, or is it just me?
Hello.
It's you. Can you hear me?
Oh, yeah, I can hear you. That's so strange.
Can you guys hear me? Can you guys hear me?
Yeah, I can hear you.
Oh, okay.
I've got selective hearing.
Peter, let me know when you can hear me.
Peter, can you try disconnecting and reconnecting again?
I can indeed. 2 seconds.
Sorry about that.
No worries.
Oh, I said that on mute. Thank God I said that on mute.
What did you say?
No, it's just like Eric's voice also is pretty low. And sexy. Oh, Peter, you're back.
I am back. Do you hear me?
I can hear you, Peter. Can you hear me?
Cool. Yeah, hear you now.
Perfect. Okay. Yeah. The point I was going to try to make is the one thing I would say is with sentiment and putting value on things, I would say it's important to distinguish between things that have broad ownership and not. So things like Bitcoin, or let's say Dogecoin, right? That doesn't have broad institutional ownership. So that can just be whatever price I want to give it, that's the price I'm giving it, right? But when it comes to something like the S&P index or the underlying components of the S&P index, right? All of that is vastly owned, buy and hold by large institutions who generally have consultants, and all of them make their decisions based off of a discount cash flow model, right? They say, if I pay X dollars for this, what is the net present value of the future dividends and buybacks that I'm going to get in eternity from this, right? They're not necessarily actively trading or going off of market sentiment. So I think that in a way, equity markets are grounded in that way. There's bounds to them, right? They can't just go up forever because people want it to go up forever. There are bounds to it. So I think that distinguishes something like Bitcoin and definitely something like Dogecoin from markets or equity markets.
I agree. I think right. I mean, I don't know if you were here when I said it. I talked to a fund manager a few weeks ago, and they're not using DCF. They're not using discounted cash flow because they wouldn't be buying anything at the moment. But they are literally going with the market. They're going with the market. And I think there's a lot of people doing that, and it's very strange. But I think there's a couple of other issues that are caused as well. First of all, you can't short in your 401k. All this stuff about people selling short is absolute nonsense. There's nothing wrong with selling short. You're making a bet on the market. It doesn't matter if you're betting it's going up or down, right? There's nothing wrong with you if you're trying to, if you're trying to say, I think the market's going to go down. I'm going to put my money where my mouth is. But if you've got 401k, right, you can invest in the stock market, but you can only buy, right? You can only go long. And that skews the market, I think. And I think that's a bit of a problem. The other bigger problem is politicians are wearing the index futures price like a little merit badge, taking credit for the price of the index futures, but also they don't want the index futures to go down because the 401ks get hit. And they've kind of painted themselves into a corner where they're trying to take credit for the markets going up, and so now they're kind of trying to they don't want them to go down. And so I think it's going to wash out at some point, but like, who knows when? I mean, Peter Schiff has been, he's been predicting the demise of the dollar for 20 years now. and it's still there. And, and he's still banging on about it. And it's like, so you can be right in theory, but like the timing's a different matter completely, right?
Yeah. Yeah. And I would also add that aside from the S&P index or any equity index as like a badge of like success for politicians, with all this money that's been printed, there is very much the need for the Fed to keep interest rates low so that the U.S. government can actually make their interest payments, right? If 10 years shot up to the 7%, I'm pretty sure that the U.S. government would, while not in default, you'd have the S&P, the rating agency, not the index, come out and lower the notch back down to AA, if you remember back in 2009. So you have that, obviously have that too. And I agree with you that there is general bias for the long because certain accounts, especially retirement accounts, which actually is the vast majority of ownership for the index. It's not ETFs. It's not individual single name stocks. It's 401k mutual funds. They are obviously bound to be long only. So all of that is there. But my argument to that is all of that actually also creates these massive, I guess, bubbles, for a lack of word, where if things do sell off, they will sell off fast.
Yeah. Oh, absolutely. Yeah. I mean, that's the thing. When it starts to go down, people run for the doors. And it's really funny in trading because like we think we know what's going on, and then we realize we don't. And there was the Black Scholes guys. They got a Nobel Prize for their option pricing methodologies and something called portfolio insurance. And the portfolio insurance was brilliant. It was a technique that you could use if the market started moving down. You could use that technique to kind of protect your position and whatever. And it was fantastic, very clever. The only thing that was wrong with it is that on Black Monday, everybody tried to do the same thing at the same time, and it crashed the market. So they got a Nobel Prize for something that had resulted in one of the biggest market crashes of all time, simply because they didn't think about what if everybody likes it, right? And so, we'll always have stuff like that going in the markets where we think we know what it is, and then something happens, and then we become a little bit wiser. And, I'm pretty sure that something like that's going to happen at some point. But that's a great thing about being a day trader, man. You don't have to, you don't have to have you don't have to put your money on your opinion in that respect. And, but it's fascinating what's going on at the moment.
So sorry.
Agreed. And I would say that we all have limits, and like
Excuse me. Sorry, Peter. Can you reconnect and disconnect again? Because apparently now all the members can't hear you.
Okay. Oh, this is funny. Okay, no problem at all.
Don't know what's going on, but maybe a Discord bug. I have to report it back to the stage.
You don't tell them my age. Can you hear me now?
Can you guys hear him now? Can you guys? Yep, they say.
Yeah, good.
I'm actually getting yes and no's. So, I mean, that's the last time we're doing it, guys. So, people who can't hear just can't hear, I guess.
That's very strange, but technology.
That's so weird. I mean, like, I don't want to end stage and start it again.
Still hear me?
I can.
Okay. They say you can.
Yep.
Okay, let's continue.
Good.
we got this recorded, guys. So worst comes to worst, you'll just have to rewind later. Okay, continue. Sorry.
Oh, I mean, I'm done. The only thing I was gonna say is, yeah, I mean, the way I'm thinking about it is as a long-term trader. Like, I'm down to like my last straw as well. I kind of have tomorrow marked as my last day. If I don't see a bad reaction or a corrective reaction to that PCE number in the morning, to say, you know, that you know, the market's going to start to try to value things under the assumption of less liquidity, you know, I'm you know, definitely closing out all shorts, because there's only so much of this one can take. But you know, for long-term investors, it's a matter of waiting, I guess. So I'll definitely reevaluate. But I hear what you're saying, that it could obviously go forever, or technically to some degree forever.
It doesn't help with all those people saying paper hands and diamond hands, right? You know, they're almost like, it's almost bad to sell your position right now. It's almost a weakness.
Yeah, I'm just excited that Jim Cramer on CNBC was like, "Oh, guys, we've broken out of the jail cell. It's only up from here." And I'm like, "Okay, that means there's a chance that this thing is going to come crashing down." So
Jim's selling.
Yeah,
That's what that means.
Exactly. So I was like, "Oh, maybe my last day is going to be of trying to be short this whole thing is going to be a fruitful one, and then I'll still be in the game." But we'll see tomorrow.
Well, good luck with that. Good luck with that.
Yeah. Well, I'm gonna hop off. Thanks for chatting. Thanks for.
Thanks, Pooh.
Yep.
Yeah. Thanks, Pooh.
Good to have someone along that's reminding people the market doesn't go in one direction.
Yeah. Pooh's kind of like plays that figure in our chat. It's some hate here and there, but you know.
I mean, it's somebody with a different set of skills and a different set of knowledge, and he's just applying that knowledge to trading, right? So he's got the economics down, so he's making plays based on the economics. That's what you know, if you've got that, use it, right? So I think
I really value his opinion. So
and if people don't like him for his opinion, you got to realize he's not. That's a problem for the people who don't like him, not a problem for him. But you know, it's good to hear lots of different sides of the market.
Yeah,
I
definitely.
think this, and this is a guy saying, I think this is going to happen, and these are the reasons. And it's good to hear that, even if you don't agree. I really do think that.
Yeah, definitely value all sorts of opinions. Alrighties, I think we can call it a night here since it's been over 2 hours. Thank you guys for coming, and thank you, Peter, for taking the time to come out here and talk and answer questions. And I guess,
thank you.
you know,
it was nice to actually, you know, come in and interact with the community. It seems like you've got a good thing going here, and it seems like good people as well. So that's nice to see. It's nice to see in this industry.
Thank you. Yeah, and for those of you guys listening, if you guys are a member, I guess like make sure to say thank you to Peter later. And then if you are new to LKS, basically the way our channel works is just go from top to bottom and read things from top to bottom. And we have a Discord tutorial if it's too overwhelming for people who are maybe a little older and not used to Discord.
Oh, that's so ageist. Oh, good Lord. You know, but Andrew, you know, we kind of met a little while back, and we've dipped our toe in the water. So you guys kind of like, if you want me to come back and do like some topic teaching, I can do that. I'd be very comfortable to do that. And if I've helped today to try and help people figure out what they want to learn, that'd be a good thing. But I don't really I don't like to partner with many people in the industry because they're mostly useless. But I do like this little community, and it's quite it's fun. It's fun to do stuff like this. So,
thank you. I really appreciate that.
Yeah. So if just give me a buzz. If you guys want to tell her what kind of thing you're looking for, we can do a training session instead of just answering one question on the topic. We can
definitely do that. I know you host like webinars. This one's just like a voice one. Next one will host like a video and voice one.
Yeah, I like this interactive style, to be honest, because not many people do it. They want you to speak for 45 minutes and then Q&A, and we can do something that's a bit more of an interactive thing because it's much more It's much more fun for me, to be honest.
Great. Alrighties then. I hope you have a great rest of your day. I know you're
you too.
daytime, right? Yeah, and a great rest of your night for those people on East Coast, West Coast, Central Time. So, alrighties, I'm going to be closing it. Thank you.
All right, thanks all. Bye.